go back and look, and you'll see if you look at a chart that since 2011, which was the last all-time high for silver, where it touched 50 for a cup of coffee, $35 has been challenged 7 times since 2011. That has been the resistance, and it has never broken through. It's failed every time since 2011. This is the third time in history we're this high. If you go back to 1980, you will see that silver was above $35 an ounce for only 40 days. That's courtesy of Vince Lancy and some of his work. And that includes the blow off top. If you look on the Shanghai Metals Exchange right now, silver closed at 38.45 an ounce in Shanghai. This is the arbitrage. And we've been talking for months now about the arbitrage price, that the higher price that silver has been listed at in Shanghai versus the West, and it's acted like a magnet. We continue to catch up to it. My guess is we'll see $38 and change in the very near future. Doesn't mean we're not going to see some resistance along the way, because this is the second largest short position, to my knowledge. Chris Marcus was talking about that it's the second largest commercial short position ever in silver. They are fighting this. The way that these things are supposed to work is these massive short positions that they now have in the commercial banks on COMEX are supposed to be hedged, right? They're supposed to be hedged in London. And if that's the case, if that is the case, that would mean that the free float in London is only 7.5 million ounces, not the 275 million ounces that we have been led to believe. So either they are hedged 1-to-1 between COMEX and London, or someone has a massive short exposure as the price is rising. Now, I believe that someone would be Bank of America. And Ted Butler talked about that for a very long time, God rest his soul, that they had a 1 billion ounce short position in silver. And to my knowledge, it's never been flushed out. But we are talking about existential threat to some of the biggest players in the world in the silver market. The May contract, as we mentioned before, had the largest delivery in the history of the COMEX, somewhere in the neighborhood of 15,000 contracts at 5,000 ounces apiece stood for delivery on the May contract. But this is a pattern that we've seen continually over and over and over again. And so I would say to you that there's a big group of very sophisticated traders that are trying to hold this down. But it appears as though maybe they are losing control. I would argue they've lost control in gold. And gold has broken through. You know, they both have that same cup and handle formation. Silver's is 45 years long. I mean, they don't get any more bullish than that. A cup and handle formation in technical analysis is supremely bullish, especially one that is drawn out as long as silver has. Gold has busted through the resistance. Silver, on the other hand, is right at the resistance. And closing above 35 on a weekly, which is amazing, is huge. Keep in mind, it only stayed above 35 for 40 days in 1980. The longer we stay above 35 is very, very big, and especially 36. We need to close the month above that. Once we do, I think you'll see a whole bunch of the institutional money, who is all technical analysis, jump on board. And this is one of these deals where one of these days, remember what happened to Bear Stearns, and remember the interview that we've talked about, again, Chris Marcus, his interview with Bart Chilton, the former head of the CFTC, who talked about what happened with Bear Stearns' short position when silver went from $9 to 21, and in essence aided in putting them out of business. So to assume that this cannot happen to a large institution is silly. And if there were going to be a sacrificial lamb, Bank of America would certainly do the trick. You can only imagine the shockwaves that would send, not only through the commodity markets, but through the banking system, through the dollar system, everything. And so it's never been more important. This is not about becoming wealthy. I say this all the time. This is an asset that offers the greatest asymmetrical risk-reward profile I've ever seen. And I think now is the time to not get cute and wait for pullbacks. This is the time to do whatever the biggest money in this country is doing. Those that are able to pull in that kind of value in silver is the same thing that China is doing. flying all around the world buying Dorian concentrate as the second largest producer in the world. It's the same thing India has been doing for 5 years, importing over 900 million ounces, which is more than the LBMA has and the COMEX in combination. And of course, Russia is saying it's part of their strategic stockpile. What we are witnessing, I think, is an awakening at the highest level in the value that silver offers and its strategic nature, not industrial. That's huge. And the charts are showing it, and the imports are showing it. This is as bullish as I've ever been on silver in my career. So there was an interesting article in regards to gold that came out by Bloomberg that said the central bank purchases, the majority of all of the central bank purchases, which they have been talking about continually as being the driving factor in the rise in gold, have been undisclosed. And the estimated purchases are as much as 3 to 4 times the declared purchases. This is coming right out of the mainstream. You have JP Morgan, who just came out and said that if just 0.5%, remember that number, Rick Rule always talks about that. If 0.5% of foreign held U.S. assets move into gold in the coming years, it would be enough to push gold to $6,000 buyer before 2029. And then you have this person named Evie Hambro, the global head of thematic and sector investing, whatever the hell that is, at BlackRock, thinks that the gold market is large, but the dollar market is even larger. Even a small shift of funds from the dollar market into gold will have a massive impact. At the same time, the European Central Bank today announced that gold has overtaken the euro as the second largest reserve asset. And this is the same central bank that 2-3 weeks ago warned that the physical gold demand is a risk to financial stability. Why would they say that? Because the amount of gold that is traded on both the COMEX and in particular the LBMA is so rehypothecated that they have to go from T+1 to T+8 weeks. So understand on the LBMA, because they say there's a shortage of trucks, what I'm getting at is that the rehypothecation, I've always said, is being played against us. The standing of delivery is what is vastly different than anything we've ever seen. The traders who recognize that keeping the gold inside the system in the form of long contracts is a fool's errand. So let's stand for delivery before everyone catches up. And when the ECB comes out and says not only is it number 2, but it warned that the physical gold demand is a risk to financial stability, what does that say for the authenticity of the markets? It's pathetic. We are seeing deliveries off of COMEX, NYMEX in gold, silver, and platinum, off the LBMA, even off the Shanghai Metals Exchange. And the reason we see it coming off of Shanghai, Dunnigan, is because the Chinese have been keen for the past couple of years at promoting state-sponsored savings programs in metal. And we know that they've asked the insurance companies to start buying it. They've even told the banks who import all the metal they can increase their quota and are specific in using dollars to buy the metal. In other words, they want to put the dollars into the excess dollars they have into hard assets rather than into treasuries as they used to be. This is a massive shift, not only in the framework of the global monetary system, where treasuries are being forsaken for commodities in your own possession, but standing for delivery is something that never happened. I remember the first interview that we did in 2020 talking about this. And I talked about the introduction of the others, this group of reportables on the exchange that came out of nowhere. And I said to you, less than 1% of contracts my entire career have stood for delivery. Now this is becoming a habitual thing, and it's accelerating. So I would say to you that there has never been a more important time ever to own gold and silver. And you can see that because the biggest money in the world is not only massively accumulating. We've talked about the central banks forever, and now we're being told that it's underestimated by 2, 3, or 4 times, if not more. There was an article just the other day where it said that Chinese purchases over the last several months are 10 times understated. So when they assume these numbers, what the hell do they know? They don't know what numbers they really are. When China's going around and buying doré and concentrate, unrefined silver and gold directly from miners across Latin America, they're doing it to remain opaque. So no one knows exactly how much they're buying. It disintermediates the market. And the theory that is out there that I think is compelling is that what they have been doing, and Eric Young, King Kong on Twitter has talked a lot about this, is that there are entities that are shorting the paper price on COMEX, which is the price setting mechanism, and then accumulating physical all around the world at other non-price setting mechanisms. They short the price and then immediately purchase the metal at subsidized prices before the market recalibrates. So I don't know. I think, look, remember the end of the book, the little boy who cries wolf, the wolf comes. I'm right there on the front cover of the new abridged version. I am crying wolf. One of these days the wolf cometh. And the acceleration, and then you look at all the stuff that's happening, here in the country. Again, we are losing confidence, we are losing faith. People are laughing at us again. We are a mess politically, monetarily, economically, socially, morally, all of these things that seem to be moving in the right direction. This other side, this horrible liberal left side that is doing this again. And again, I'm a liberal person in terms of social. Do whatever the hell you want. I come from a family where my parents were hippies. I'm okay with lifestyle, but all this stuff, this isn't liberalism anymore. This is way past liberalism. And we're told by Gavin Newsom that, everything's okay. It's peaceful, yet the Apple store is being robbed right in front and things are burning down and people are being hurt. This is more of the same stuff we saw for the 3-4 years preceding. And God help us, it just seems as though it's getting worse. And maybe this is part of the reason you're seeing mass deliveries and mass accumulation by the big, sophisticated money. As the public, they're asleep at the switch. And that's the thing about where we are right now that is so horrible. So many people will not be able to get out of the way of what's coming because they never saw it coming. Who has $8.5 billion to take possession of gold in the May contract? $4.5 billion in the March contract, where JP Morgan swore it was for a customer. Who's got this money? Who has the ability to take possession of billions of dollars worth of silver that's come in the last few months? Who? And ask yourself, these people who have that kind of money, do you not think that they're connected at high levels to know the information before the rest of the plebes like us get it? If you don't see these crumbs and you're waiting or looking at this as a profit play, you are missing everything I've been trying to scream at you all about for a long time. This isn't about getting rich. This is about protecting everything you've worked your life to preserve.